All right, good morning, everybody, and thanks for Coffee Talk with Sean and Don. I think I just said coffee. I meant Coffee Talk with Sean and Don. And Chris has a meeting. Um, and for those of you who don't, Chris's wife is actually expecting, I think, due sometime in the next week. So if for some reason you can't get a hold of him, don't automatically assume, but that might be what's going on. So feel free to reach out to Don or myself. So this is pretty informal. I figured it's place of the Tuesday, normal Tuesday meeting. We just do a little 30-minute chat, or maybe it'll be longer, maybe it'll be shorter. So feel free to chime in with questions and such. Just going to kind of touch on some current events and all of that. So let me do a quick share screen here. There you go. So DJ, obviously feel free to just jump in here anytime. So a couple of let me actually get back here first. Just thought these are some interesting statistics, not so much this one. But we've seen this chart pop up before. We're always blaming kind of the lack of inventory over, people anchored their homes because of lower rates. It feels to me, granted, I'm talking generally the audience I'm talking to are already interested in buying, but it doesn't feel like people are kind of glued to it. As I always tell, just a general buyer, if someone's buying or selling a house, interest rate is usually not in the top three, maybe even the top five reasons why they're motivated to be doing this. It's usually life situations, needing to move for work or anything else. So I would say yes, everyone knew that interest rates were back at 3%, but that's going back 3 years ago. If you remember, just 2 years ago, rates were over October of 2023. The high water mark that we've seen in the past 20 years was an 8.4%. That was almost exactly 2 years ago. But this just to show that pie chart, and obviously as each month goes by, there's less of these on the left-handed side and more of these on the right-handed side. But just to kind of show you that one, we haven't seen that in a little while. But if anybody has any thoughts or comments on that, just feel free to chime in. Or DJ, anything takeaways you want from that?
No, I just think you're trending more to these rates in the sixes, and people are holding that trophy rate still of the 3% range. But I do believe that they're getting into positions where they're going to need or going to want to sell,
Yeah.
uh, which is good.
And I would sort of argue anybody who's thinking about moving, that 5% interest rate isn't holding them in their house. And frankly, even at 4 to 5%, I don't think that's kind of holding anybody in their property. So you're looking at, based on these numbers here, about 50% of homeowners with a mortgage. Keep in mind that's with a mortgage. There's more, free and clear properties now than there ever been. So just keep in mind, this isn't 50% of all homeowners. This is 50% of all homeowners with a first mortgage. So
Also, keep in mind too, Sean, a lot of these people that are sitting on those rates are heavily debted. And the last three pre-approvals I did over the last week here um, proves that because I had borrowers wanting to pay down debt before they moved on. I said, don't do anything till we review the file and we'll use your money the right way with the proceeds from the sale of their home. So if we can get people into the house, maybe just a car payment and a house payment and eliminate all their credit card debt, still get a reasonable mortgage payment, that's what makes sense.
yeah, it's great. I'm glad you mentioned it. I just talked to a customer yesterday, and they're doing this sell over and then buy. They're already house under contract, and they're planning on putting. It was a weird number, like whatever the down payment dollar amount. It was like 11% down, and I said, okay, and they had a fair amount of credit card debt, and I just said, hey, we can go with that. You can move 11% down, 10% down. Just so you know, you can qualify at 5% down. It's conventional, not a first-time home buyer, obviously. And we just said, hey, if you wanted to keep that money in your pocket, whether it's for home improvements or to pay off some debt, and they had something like $23,000 in credit card debt that probably was just going to sit there if not. So they haven't made any decisions, but just to sort of remind them that, hey, that credit card, whatever the math was, if this was an extra $20,000 being added to the mortgage with PMI and all that, it's probably about $130 a month versus these credit card payments, which you can kind of just choke on month to month. So, yeah, good call on that. It cuts. This one, the HUD is making it a little bit cheaper for FHA buyers buying multifamily. The PMI just got a little bit less. So that's people would be running, to take advantage of that. Maybe not, but shows it's helping. And anytime the government's throw a little cash towards home buyers' way, we will happily take that. So those are just some headlines I wanted to go over. Let me jump over here. You know what? We'll stay here for a second. So Tom Ferry, I feel free to chime in the chat. I'm kind of curious. Tom Ferry, I think, is a very big name in the real estate world, and he's coming to Cleveland. He himself, as I understand, is coming to Cleveland doing a presentation. Costs $219. So if you want to pay $219, I would encourage you to check this out. I hear it's amazing. However, if you go to, I'll drop the login here. Cross Country Mortgage is hosting this event. You can just sign up. Don't go to this one and pay $219. Go to the other link I'm going to drop in here and register. I believe it's an 8-hour event called Listing Edge. He's going across the nation and doing these, and I'm told they're selling out. Right now, we have 500 people signed up for it. We only have a handful from this office, so I'm hoping we could, kind of pack the house with some of our own people here too. It is October 15th. I believe that's the day after the business planning seminar. But hey, what better way? Go right from the business planning seminar and jump into this, and I think that's a great segue. So sorry about this. I have the wrong link. So here it is. I would encourage you all to check that out, and please, and feel free to share this too. But Tom Ferry, 8 to 5. We'll probably have a little bit of an event afterwards. I believe lunch will be included in there as well. But it's beautiful venue. For those of you, if you haven't been in the Hilton downtown, it is a great venue. So definitely want to make sure everybody knew that was available. So going to touch on interest rates a little bit. So the last, if for those of you who are on the fireside chat, that was the Wednesday. It was 1 o'clock on Wednesday the 17th, which was Fed Day. 2:15 was the Fed announcement, and as expected, they dropped it 0.25%, the federal funds rate. And for those of you who are, in the meetings leading up to it, just with the Tuesday talks that Don and I and Chris give, we had mentioned, hey, and Mike's even mentioned this months before. Now, Mike's no smarter than Don or I, but he just likes to get out in front of it even sooner. But he said, hey, don't be surprised if after the Federal Reserve Board meeting happens, you might see interest rates might not go down, and heck, they might not even go up. So here's where we are. Let's just track this calendar. Here's August 20th, roughly a month before the Fed meeting. Here is September 4th. This is just after job numbers came out. So for those of you on the last few meetings we've had said, hey, the first Friday of every month, typically when there's not a government shutdown, the job numbers came out. The last few job numbers came out very poor, which forced the Fed to drop interest rates. But here's what happens. The federal funds rate was dropped on September 17th. But look, see, that 30-year fix go from about 6.5. This is the kind of the national survey average, all the way down to this is September 16th, the day before the Fed meeting. The average 30-year dropped about 0.3%. Then guess what happened? The Fed, just as scripted, dropped it at 0.25% federal funds rate. And look what happens to interest rates. September 18th, the day after the Fed meeting, the average 30-year fix jumped up 0.25%. Did anybody see any headlines on that? Nope. Did we tell you that could happen? Yeah. I don't want to say I told you so, but so everything, mortgage rates are trying to predict the future. They're saying, hey, you want to borrow a rate today for the next 30 years? What impacts that? Inflation is the biggest one. So inflation is back on the table. The last few inflation reports came in pretty much as expected, but you know what? They're nowhere near the 2% that the federal funds rate is kind of setting as their target. So we saw rates back off a little bit. Now there's a October 29th and a December 10th meeting. So today's interest rates right now are predicting a 92% chance of another Federal Reserve drop on October 29th. And then, oops, let me jump over here. Oh, excuse me, I'm sorry, wrong one. A 92% chance of another quarter drop on October 27th or 29th. And then December 10th, yet another quarter of a drop. That's the federal funds rate. Do we think interest rates are going to drop? That's a quarter plus a quarter. That's a 0.5% drop. before the end of the year in the federal funds rate. Do we think mortgage rates are going to drop 0.5%? I'd say probably not. Happily, we would take it. It'd be great to see something comfortably into the fives with no points. It's a long shot that's going to happen. If you look at some of the predictions, Fannie Mae, Freddie Mac, NAR, some are predicting, yeah, you might see it get at 5.99. Most are sort of expecting to get to 6.4 by the end of the year, and then by year end next year, maybe to sneak into the fives. DJ, is that consistent with what you've seen out there too?
Yeah, but my recommendation is buy the house,
Yeah.
regardless of the interest. Buy the damn house.
Yeah. Don't be a rate expert. I mean, Don and I stare at these all day long, and if you want to find somebody who says interest rates are going to be at 7% or somebody who says they're going to be at 5.5%, just Google it. There's people out there and they got a whole bunch more degrees and letters behind their first name than Don and I. But that's not a reason to buy a house. If you're trying to time the market, it's impossible. So just wanted to touch on those
Okay.
interest rates. Does anybody have any comments or questions? Nope.
Sean, the other thing is too, people keep talking about a housing bubble, housing bubble, housing bubble. It's not going to happen. I just came off a webinar this morning with Barry Habib, and he showed over the last 50 plus years, we had one period of time where houses depreciated. That was 2007 through 2011. I think we all know what happened in that period of time. You could have got a loan with no money down on a 580 credit score if you were breathing. So that period of time is the only time that we had um, depreciation or a loss in value on homes. There was one other time prior to that, but it was less than 1%. So he rules that one out. But houses aren't dropping in price, people.
Go for it. If anybody wants a little perspective, Marilyn McCullough, who used to be an agent in this office, I may have told the story before, but she came into the office somewhat excited. And I was like, oh, what's going on? She was throwing out a file cabinet. Why is that exciting? Well, crammed in the back of the file cabinet was this sheet that I still keep right under my in my top shelf here on my desk. It was from 1982. I bring this out for perspective when a customer is sort of bummed about interest rates and where they're at. American Midwest, 16.25%, 20% down, and it required 3 points. Central National, whoever that is, 16.75. Citicorp, 19.5%, and you're required to get a second mortgage. So again, I know those days are way, way behind us, and we should never see those again in our lifetime. But anyway, just fun for perspective, and always like throwing that one out there. Couple of other headlines here. Sort through my little list here. So the government shutdown, I have had a few people reaching out going, hey, if the government shutdown happens, what does that mean for us? It's funny, years past, the mortgage market was probably a little bit more hitting a panic button. There's not a ton of drama that we see happening. Could be a little disruption on a few items. Sorry, I just gotta be here. First off, Fannie Mae, Freddie Mac, VA, FHA will be open. Now, kind of deep into their headquarters and some of their kind of the home base operations might be less staffed or lightly staffed. So there could be some things like with bigger, big picture initiations, or if you're in the middle of you have a house that's under contract and the condo association isn't approved, you may have submitted a condo approval to HOA, or the lender may have. That may be a little lower. But FHA, we're still going to be able to close government loans. USDA loans do tend to be a little bit more dodgy during shutdown. So if you have a USDA loan, I would definitely sort of be on guard for that. IRS transcripts. So probably in about 10-15% of transactions. If you're self-employed, or there may have been some sort of tax debt owed, we may have to get transcripts from the IRS. In the past, they have shut those off or just been severely delayed. So that can impact. There is a potential for that, but we haven't seen any formal announcement of what would or would not happen with that. Flood insurance. Sometimes in previous shutdowns, flood insurance is kind of won't be issued, so flood insurance policies won't be issued. Usually, lenders aren't going to let that slip. That's going to be a big one because we need to know what the premium is, so be aware of that. If you have somebody who's a government employee, so someone might be saying, hey, as of Tuesday or next Monday, don't come to work, you're being furloughed, or whatever the terminology they're going to give is. Now, in every shutdown, DJ, correct me if I'm wrong, retroactively that employee still gets paid out, and there's usually something
Correct.
worked out. So lenders may treat that case by case, but if you have a government employee who's going to be temporary furloughed, that could delay the closing process if the employment verification can't be. And then really overall, the shutdown will create a lot of doubt. I mean, it's certainly negative, I think, big picture wise, but I saw a note blurb yesterday that, it's going to totally impact the economy and GDP will be impacted. And yes, it would be, but it'll be relatively minor. And then when the shutdown's over, it should get caught back up. So the shutdown is definitely something, the mortgage world is watching, not necessarily panicking about, but you want to be aware of it. So I would tell you as a realtor, don't panic, be aware, be prepared in case you're in the thick of a transaction and a customer's asking you questions, or just if a transaction in process and the shutdown happens, shoot a quick call or email to the loan officer just going, hey, is this shutdown going to impact us at all? Maybe it's a self-employed buyer or an employee, a government employee where you want to kind of stay ahead of that. So that's just the warning that I would not, I would say warning, but just the awareness that I would tell you to have. Don, anything there?
Nothing to add on that. You nailed it.
Okay, cool. One thing I saw the email come through, and I'm kind of just curious. So feel free to unmute yourself but the brokers opens. It's funny back in the day, and yeah, I'm old enough to be able to say back in the day, pre-COVID and way before that, where Tuesdays were fantastic. We got to get out, we got to see each other. You could strategically, I used to think Brokers Open was like the Costco of the world. You could strategically, game plan the best free meal around, and then end it with dessert and the condos and blah blah blah. So I'm just kind of curious. Is anybody going out on these Brokers Open or hosting? I'm anxious to. I was curious to see just what kind of traffic we're seeing out there. So feel free to just pop something in the chat or unmute. But are we people taking part in these? Don, have you been to any lately?
I have not.
The last few I've been to were kind of the kind of off hours evening one, kind of sneaking in on the way home.
Right.
And those have been pretty well attended. So I was kind of just curious. Anybody else out there finding some success with this? And I mean, I think it's kind of cool, you know, us getting to see each other again. I think Eloise gone out to some. So okay, kind of just curious. So I know I had a family member who had a house for sale, and they were all excited about the Tuesday Brokers Open, like that was going to sell the house. They ended up being under contract before that Tuesday came around, so didn't get to see what the traffic through was.
Well, they're back in vogue with houses sitting a little bit longer.
Yeah, yeah, makes sense. You're right. You're right. Yeah, I will. Sorry, as far as I Don probably would agree to this. I kind of gauge kind of how busy the market is or how busy my coming week is going to be by weekend activity with, oh my God, I got to get a pre-approval right away. And it's still shocking with how many people, you know, don't think they're buying a house Friday at 5 o'clock when, Don and I myself are expecting phone calls to come in, and then wait until Saturday when they see that house and make the offer. And, it's still that, hey, look at a house once and make an offer rather than go get mom and dad and have them stop by the next weekend, for a second look before they put the offer in. There's still that urgency there. We're writing pre-approvals quickly and over the weekend. Had two myself. One was just an updated pre-approval. Another one was, from start to finish, need to get pre-approved before all offers are due. One was Saturday at 5 and another one was Sunday at 8 or whatever it was. So we are able to do that, but not, I would say too, not every buyer qualifies for that instant, quick, same day pre-approval. And then, of course, keep in mind, not every lender is available for that. Between Don, Chris, and myself, and then, of course, you may know Carmen. She's got some overflow in there too. So sorry if these keep popping up on the screen. I can't turn those off at the moment. But any other topics you guys want to touch on today? I forgot to start it off with the coffee. So if you guys got your coffee, I have donuts in the office. So if anybody's in Pepper Pike today, I brought some donuts in just to kind of keep with the feel.
Andrew's smiling. He's got something to say.
Yeah.
I'm just the only guy with his camera on. I don't know.
He's thinking about heading east to the donut shop. So you're on the west side, down at pick up. Oh, Jeremy, what do you got for us today?
Unmute.
I got excited when I heard donuts, and then I heard East Side, so now I'm bummed. And Don's playing hooky, unless I don't know, unless that's a different photo in his office now.
No, no, Don's got a busted up knee and can't get up and down the steps right now with crutches.
Oh, geez.
Yeah.
Sorry to hear that.
I'm at the house working. But Sean, regarding you talk about the pre-approvals coming in on Friday and Saturdays, I think I've updated more pre-approvals over the past couple of weekends than issued new pre-approvals.
Yeah. Yeah, I would agree. I think, yeah, it does feel like that. A lot of my pre-approvals were back from April or May, so maybe they, kind of missed the sh summer window and are still in it. And when you, Jeremy, I guess if you don't mind, since you got your camera on, right now, if someone's saying, "Hey, is this a good time to list my house?" Are they are interest rates, are mortgages, is that come up as a question from them, or is that part of your answer to them? Just kind of curious.
It comes up. It's not a primary objection or topic. I would say more so getting them real with the market and in line with what's happening and pricing ahead. Because I've negotiated price drops with my sellers more times in the last 30 days than I've done in easily 5 years or more. So I think that's a big thing. Just prepping them. Here's what this looks like, and here's where the market is. Make sure you're on the same page. Otherwise, it's not worth it unless you think you can get them down over time. But I don't like that strategy. So pricing right is the biggest that we're dealing with.
Oh, well said. Yeah, and if you're looking for like a little blurb, if somebody just said, "Well, I want to," we just got done saying right now the expectation is for the Fed to have two more drops of a quarter point each, and when somebody hears that, they just assume, okay, mortgage rates are going to go down. I would certainly quick back with, hey, don't rely on interest rates to, sell your house or to, help you win the next house, for example. And it's, again, right here, let's say black and white, blue and white, rates went up 0.25%, within 48 hours of the last Fed drop. So kind of keep that in the back of your mind. If you guys are, whether it's, sitting down at a listing, headed to one, or working with a buyer and just, want to, hey, Sean or Don, give me just a 30-second blurb on what's happening, just to kind of, or, you guys are looking to post something. I don't want to inundate the KW Agents Facebook page. I kind of want to go in there sort of tactfully with little market updates. So some stuff is going on to Don or Sean's, cross-country mortgage page as well. Oh, I've got a great chart for you guys, but
Sean, one thing I want to add too is when we do a pre-approval, guys, I know this is true of myself. The interest rate that we're using to qualify that borrower is not the interest rate that they're getting locked in at that point in time. I know myself, I usually use a rate about 0.25% higher than the market for qualification purposes to allow for any movement in the market. You cannot lock an interest rate in until you're actually under contract and we have a property address. And I try and let the borrowers know that. They say, "Well, what's my interest rate?" I says, "Well, I'm qualifying you at X. If you were buying today, this is what it would be, though." I said, "Rates move daily, so I always want to give you a little bit of wiggle room." So if that conversation comes up about rates, just let them know that in a pre-approval, it's not the interest rate you'll be getting when you actually go under contract. That way we're all on the same page.
Here's a one. I know you'll like this one, but I thanks to AI, I put this beautiful chart together, and this is shows the 30-year mortgage rate. This is the average since April 1st. That's a top line. And then this is the Guardians' expectations of winning the division. And you can clearly tell when the Indians win, rates go down. So if you're looking to really have kind of an invested rooting factor and the Guardians moving on here, it clearly helps interest rates. And look no further than this chart. And as Tom Hamilton say, the great thing about statistics is you can make numbers dance. And yeah, that's what's going on here. So I thought that was a good share. But cool. Anybody headed down to the game today? I'll be down there tomorrow. Locked in. So I was gonna say I'll buy you a beer if you swing by, although I'll be if it's before the first pitch, I'm all in for it. So if anybody's gonna be down there tomorrow, I'm expecting to be there. And I'll say go Guardians there, but if anybody has the interest in hooking up there, let me know. Cool. And Don, anything else you want to add for the meeting today?
No, go Tribe.
All right. Go Go Tribe. Again, I put this. I'll be reposting this on the Facebook. Actually, I'm sorry. Carrie sent in the email this morning, just reminding everybody about this presentation. I'm sorry, between our coffee talk here. There's also a link for this, and of course in the chat box there. So love to see you all then, and hope to see you all before. And if anybody has any parting shots, I'll give you guys a second. And yeah. I guess we're good. All right, go Guardians, and we will see you all later.
Thanks, guys.